Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the complex financial world. This quarter, H2O America has some interesting things going on, especially with their major acquisition plans. This report dives deep into the financial health and operational details of H2O America, a company that provides essential water services. We'll be looking at how they are doing financially, the big deals they are making, and the risks they are facing. If you want to understand what is really going on behind the numbers, stick around. And hey, while you are here, if you enjoy getting straight insights from these dense corporate documents, make sure you are subscribed and consider joining our Discord community, linked in the description below. Let's kick things off by looking at the company's financial performance. For the 3 months ending the 30th of September of 2025, H2O America brought in $240 million in operating revenue. That is up from $225 million in the same period back in 2024. And for the first 9 months of 2025, they earned a total of $606 million in revenue. A solid jump from $550 million in the same 9 months of 2024. This shows a healthy increase in their top line. Now, what did it cost them to make that money? Their total operating expenses for the 3 months ended the 30th of September 2025 were $175 million, up from $166 million in 2024. For the 9-month period, operating expenses climbed to $462 million from $423 million in 2024. While expenses did go up, it looks like their revenue growth outpaced it as their operating income increased. For the 3 months, operating income was $64 million compared to $58 million in 2024, and for the 9 months, it was $144 million, up from $126 million. This all trickles down to net income. For the 3 months ended the 30th of September 2025, H2O America reported a net income of $45 million. That is up from $38 million in the same period of 2024. And for the 9 months that ended the 30th of September 2025, net income was $86 million. A significant increase from $71 million in 2024. This is great news for shareholders, an almost 22% increase in net income over 9 months. Let's look at their balance sheet. As of the 30th of September 2025, their net utility plant, which is basically their infrastructure, stood at almost $3.8 billion. This is up from about $3.5 billion at the end of 2024. They are definitely investing in their infrastructure. And on the other side of the balance sheet, total stockholders' equity grew to $1.52 billion as of the 30th of September 2025, up from $1.36 billion at the end of 2024. This indicates the company is building value for its owners. However, they are also carrying a significant amount of debt. As of the 30th of September 2025, their long-term debt, not due within a year, was about $1.75 billion. That is up slightly from $1.7 billion at the end of 2024. While debt is a common way for utilities to finance large projects, it is something to watch. Now, how are they generating and using cash? For the 9 months ended the 30th of September 2025, H2O America generated a healthy $181 million in cash from its operations. This is a good increase from $154 million in the same period of 2024. This strong operating cash flow is crucial for funding their investments. When it comes to investing, they used a lot of cash net. Cash used in investing activities was $369 million for the 9 months of 2025, a big jump from $232 million in 2024. This is tied to their increased spending on utility plant, which we saw on the balance sheet. They are putting money back into the business. To fund these activities, they turn to financing. Net cash provided by financing activities was $188 million for the 9 months of 2025, a substantial increase from $72 million in 2024. This increase came from more borrowing on their lines of credit, equity offerings, and some new long-term debt. Now for the big news, the Quadvest acquisition. H2O America, through its subsidiary 2UC, is in the process of acquiring the regulated water and sewer utility business of Quadvest for a base amount of $483 million. They are also acquiring the wholesale business for another $56 million. This is a huge move for them, aiming to expand their operations significantly, especially in the growing Houston, Texas region. They expect Quadvest to bring scale, a strong development pipeline, and local expertise. This acquisition is the main story here this quarter and explains much of the increased activity in their financials. Looking ahead, there are other significant events. On the 28th of October 2025, CWC, a subsidiary, entered into an agreement to sell $60 million of senior notes. These notes are due way out in 2055, showing a long-term financing strategy. And in October 2025, they received another $3.7 million from a settlement related to PFAS contamination. This is part of an ongoing effort to recover costs associated with these environmental issues. Remember, these kinds of settlements, especially when recurring, can really impact a company's bottom line and reputation. Of course, with big moves come big risks. The biggest hurdle right now is getting regulatory approval for the Quadvest deal. The Texas Public Utility Commission, or PUCT, needs to sign off, and there is no guarantee they will approve it without imposing conditions that could change the deal or even block it. This regulatory uncertainty is a major risk. Even if they get the approvals, integrating a large acquisition like Quadvest is incredibly challenging. They need to merge cultures, systems, and operations smoothly. If they mess this up, they might not get the expected benefits, and it could hurt their financial performance. And what if the deal falls through completely? That could be bad too. They will be left with costs they incurred trying to make the deal happen, potentially damage their reputation, and have wasted management time that could have been spent on other opportunities. Overall, H2O America is showing strong revenue and net income growth driven by existing operations and rate increases. They are making substantial investments in their infrastructure, which is a good sign for long-term stability. The planned acquisition of Quadvest is a bold strategy to expand their market presence, especially in a high-growth area like Texas. However, this move comes with significant risks, primarily centered around regulatory approval and the complex task of integrating the new business. The company's debt levels, while manageable for a utility, are something to monitor closely, especially with increased borrowing related to the acquisition. The ongoing PFAS litigation settlements are a positive in terms of recovering costs, but highlight the environmental liabilities the company faces. In essence, H2O America is in a period of significant transition and growth. The success of the Quadvest acquisition will be the defining factor for their future. If they navigate the regulatory landscape and integration challenges effectively, they could see substantial benefits. If not, the risks could outweigh the rewards. Alright, that is our breakdown of H2O America's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.